Hi friends, what you see on my screen is list of small cap mutual funds and how they have performed over the last 3 years, 5 years, 10 years in terms of rolling returns. So if you see Quant Smallcap Mutual Fund in the last 5 years on rolling return basis have generated 46% annual returns. This is mind-boggling, and by far Quant Smallcap Mutual Fund is the best small cap mutual fund in the last 5 years. Nippon India comes at number 2 at 37%. So Quant is miles ahead from number 2, and therefore what we can see here is that Quant has been the best performing small cap mutual fund if you hold the small cap mutual fund for 5 years consistently. And therefore what we can see here is that Quant small cap mutual fund in the last 5 years has generated huge alpha as compared to many other mutual funds. However, if you look at last 6 months performance of Quant small cap mutual fund, you will note that this fund is down by almost 19.86% since the time the correction started in Indian equity market. Of course, small cap 250 index is also equally down by 20.62%, and that brings me to a very critical point here, that if such a successful mutual fund has beaten down by almost 19% in the last 6 months, how are they managing their portfolio in the last 6 months? Because they have taken a beating. And I'm sure many of the retail investors may have seen a lot of hit in their portfolios. It might be down by 10% for many. It might be down for 20%, 30% for many of you. And the key question is that, can we learn something from Quant Small Cap Mutual Fund in terms of how they have been managing their portfolio in the last 6 months since the time the downtrend started? Hence, I'm creating this video and I'm going to completely break down their portfolio in terms of which new stocks have they added in the last 6 months, which new stocks they have exited in the last 6 months, what are some of the strategies or patterns that I can find in terms of which stocks they have accumulated. So if you watch this video, you are going to pick up at least 8 to 10 new things about how to go about managing your portfolios during the downtrend, having a look at the practical example of how Quant small cap mutual funds are doing. Again, I'm not saying that you go and invest in any of these stocks. The idea here is to teach you practically one of the very successful small cap mutual fund and how are they managing their portfolio. A ton of learning your way in this video. Request is not to skip this video. Watch this entirely. I'm pretty sure after watching this full video, you're going to say it was worth watching it. With that confidence, let's get this video started. Have a look at my screen. Please do not worry, I will simplify everything here. What you note as a first thing is that at the end of March 31st, they have total almost 87 stocks, if I am not wrong, 86 stocks in their portfolio. So it's a huge portfolio. Quite a number of stocks is what we see in their portfolio. But in my view, retail investors should not have as many as 87 stocks because it is extremely hard to keep track of what is happening in so many number of stocks. In my view, maybe 20, 25, 30 is the maximum number of stocks that you should have in your portfolio, not more than that. But again, if I look at some other important parameters here, number one is what is the total exposure of these stocks in their portfolio. So for example, number one is Reliance Industries Limited, that has got 10% exposure to the overall portfolio. Another important point for us to learn is you really do not want to allocate more than 10% of exposure to one single stock because it becomes extremely risky. And especially if you have small cap stocks in your portfolio, please make sure that you do not have high exposure to one single stock. I've seen people who have got 20% exposure to one single stock. It is extremely risky. I'm not saying that it is not going to yield you good results, but the point here is that even these experts are not allowing one single stock to go more than 10% of their portfolio. Important point for us to understand. Now, what you see here, another important thing is that I've got the quantity of each of these stocks from October last year, since the time the downtrend started, to almost March period here. And now I want to walk you through how they have managed these 87 stocks. Let me now walk you through which new stocks have they added in the month of March 2025. What you see here is that total 5 stocks is what they've added. Number one is Welspun India Limited, Castrol India Limited, Shipping Corporation of India Limited, Bandhan Bank Limited, Stanley Lifestyle Limited. Now, none of these are recommendations, obviously, but what I really want you to do is note the pattern here. For example, Welspun India Limited, if I show you their revenues, you will note that Welspun India Limited gets almost 88% of their revenues from exports. So it is highly dependent on the exports that it does to many countries. And the key question is, if you look at the tariff impact. So for example, if you look at what the tariffs that Trump has announced, which is Bangladesh has got 37 tariffs to exporting to US, and as well as Sri Lanka that has got 44 tariffs. So huge tariffs is what Trump has announced on Bangladesh as well as Sri Lanka. And guess what? Bangladesh and Sri Lanka, these two countries are the textile export countries to US, while India has got only how much? 26% of tariffs when it comes to overall reciprocal tariffs. Now again, these tariffs may change. Now these relatively lower tariffs on India versus Bangladesh and Sri Lanka makes our textile sector having an edge over many other countries, and therefore Indian products prices are likely to be lower as compared to Bangladesh and Sri Lanka from a tariffs perspective if these tariffs remain constant. So that's the story on stock number 1. But if you see the remaining 4 stocks, the pattern here is that none of these stocks have got high exposure to the global macros. They are totally driven by India's story and have very little impact when it comes to tariffs. For example, Castrol India Limited, if I show you, have a look at my screen, you will see that Castrol India Limited, 99% of their revenues are coming from India. So they are largely dependent on India. If you look at, for example, number 3, Shipping Corporation of India Limited, they have got some exposure. So almost 77% of their revenues in FY23 came from India. Some exposure to Singapore, 9%, but largely an Indian driven story. Again, if I go back and talk about 4th stock, Bandhan Bank Limited, we all know 100% story is driven by India. And lastly, Stanley Lifestyle Limited also has got completely Indian consumption story, as you can see on my screen. So the pattern here we see is that out of these 5 stocks, 4 are completely relying on India's growth story. They are not relying on export and import largely. And one stock, which is Welspun India Limited, is mainly because I think overall, if you see, textile sector is going to benefit because of relatively lower tariffs as compared to Sri Lanka and Bangladesh. Again, the name of these 5 stocks do not really matter to us. What we really need to think about is that if you are picking a new stock in these uncertain environments, do you really want to go after a stock that has got huge dependency on global macros, versus do you want to stick with a company that is primarily driven by India's growth story? Something that you can think about. And the second key point that you will note from these picks is that if you look at their total percentage, it is very, very low to the overall exposure. 0.39% is Welspun India Limited, 0.18% is Castrol India Limited. Point is very, very simple. In these uncertain times, if you're doing any buying, what makes sense is that you do gradual buying. You are not going to pick a stock that is all of a sudden taking 3% or 4% or 5% of your portfolio. Even if you want to get to 5% of your portfolio, make sure that you're buying gradually. That's what the pattern we see. Very, very limited buying they have done in the month of March. Again, I don't know whether they will continue to buy these stocks in the month of April, May. We don't know that. We are likely to see that once we see May data, April data, June data. But point is very, very simple. If you're doing buying in these uncertain and volatile time periods, it makes sense to do gradual buying over a period of time. Don't rush to buy everything in one go. Moving on to next point, how many stocks have they exited in the month of March? So if you see my screen, there is only one stock that they have completely exited in the month of March, which is State Bank of India. And if you look at the pattern here, this stock was not in their portfolio in the month of October 2024 when the downtrend started. They picked up this stock in the month of November, held it until December, and then in the month of January they reduced it. In February they kept the reduction, and in the month of March they completely removed this particular stock. The point here is that they only exited in the month of March one single stock. Let me ask you, how many stocks have you exited in the month of March? The point is that a portfolio here that has got 87 stocks have only exited one stock in the month of March. It means that they have not got rid of stocks out of the panic. This is the key message that I want to deliver with this example here. Please do not go and sell State Bank of India. That is not the intention here. The intention here is to tell you that out of panic, please do not do any selling. And that will only happen if you do thorough research on your stocks, build your conviction. And once you have the conviction, you know that I know that the market is falling right now. It doesn't mean I've picked up a bad stock. It's only that I have to go through this volatility. I know it's very, very hard to do so, but this is what we are learning. And this is what I'm trying to reinforce to the retail investors, that do not sell your stocks because of panic. At least experts are not doing that. Of course, there might be some reduction in the positions that they might have taken. Again, I'll come to that in a minute. They have definitely reduced some of the stocks. We'll talk about that as well, but they have fully exited only one stock in the month of March 2025, which is State Bank of India. And that nicely brings me to point number 3. So how many stocks have remained constant throughout this October to March period? Important point here. So let me show you. So if I come down here and have a look at how many stocks have remained constant. So if we see total almost 42 stocks, they have not reduced even a single bit. They have remained constant. They haven't sold these. they haven't reduced these, they haven't bought or added new quantities into these portfolios. So total 42. And if I do the sum of what is the total percentage of their portfolio, if I come down here and add their percentage NAV at the month of March, 35%. So total 35% of their portfolio had remained intact throughout October to March. Isn't this mind-boggling data point for us to look at? Let me ask you again, what percentage of your portfolio have remained constant in the last 6 months when this downtrend started? Point here is that they haven't sold these 35% of their portfolio, meaning that you can also look at this from a perspective that these stocks remain high conviction bet for this particular mutual fund because they haven't sold it, they haven't bought it either, but they have remained constant. Some of these companies you might go and study for yourself. For example, if you like, I don't know, food product sector, because it is totally dependent on India's story, Pngtree Food International Limited, they have held the stakes for last 6 months, so maybe it becomes a good case study for you to go and do some research. Please do not blindly take any of these stocks as a recommendation. The point here is that you can go and slice and dice this data as well further. For example, you might say that rather than studying all these 42 stocks, I'm going to pick these top 3 stocks because they have got high exposure in terms of their overall portfolio. Therefore, it means that Quant Small Cap Mutual Fund really likes these stocks. What is so special about them? Let me go and study these stocks, and that might become another thesis. Third way to look at these stocks is that you might go and see what was the price in the month of October and what is the price now in the month of March. Have a look at the stocks that are maybe down by 30%, 40%, 50%, and maybe do further research on those stocks. So there are various ways in which you can go and analyze this data further. But the point I really wanted to deliver here is that they have made 35% of their portfolio intact during this 6 months of period. And this is something that we need to learn as retail investors, that we need to build those positions where we have conviction and stay with our conviction rather than just selling out of the panic. So far, if you're liking this video, request you to hit the like button. Let me know in the comments a simple thank you. It motivates me to do a lot of analysis for you at zero cost. Also, if you want to get my exclusive analysis, then you can consider joining my YouTube community because I post almost on daily basis on various assets, for example, stocks, mutual funds, ETF, etc. You are going to practically learn. The feedback of this community has been excellent. Simply go to my channel and find the join button and be my guest. With that, now let's move to which stocks have they reduced in the last 6 months of period. So what you see on my screen is total how many? 9 stocks, I think. Yeah, total 9 stocks is what they have reduced in the last 6 months of period. Now there is a very interesting pattern here as well. For example, Tata Chemical Limited, they have reduced by almost 42%. And if you look at BLS International Services Limited, they have reduced by almost 63%. Now, is there anything common between these stocks? I found one thing. So for example, Tata Chemical Limited, if I go and show you, Tata Chemical Limited has very high global exposure. For example, 27% of their revenues come from India, but 34% from USA, 15% from UK, Kenya 4%. So the point is simple, that this stock is reliant on global macros. Tariff situation might be playing into it. Therefore, I see that is one pattern here. If you look at the BLS International Services Limited, something very similar here. It is highly reliant on exports from India. As you can see here, Middle East 39%, North America 26%. The question you need to ask yourself is that in your portfolio, which are the stocks that are highly reliant on the global macros or the tariff situation or the US economy, and you really want to re-review and have a look at those positions. Again, I'm not saying that blindly get rid of those stocks. The idea here is to review those stocks and make sure you decide for yourself whether you want to reduce them or want to retain them. That's a call that you will have to take at your portfolio level. And if you decide, you know what, one of the stocks are very heavily reliant on global macros, you might want to gradually reduce it. Again, please note the stress on gradual here. Anything that you do in this market shouldn't be very sudden, abrupt. You really need to think about gradual buying, gradual selling. That makes a lot of sense in the uncertain environment. Moving on to the climax of this video, which is which stocks have they accumulated more during these 6 months of period. So important point, please pay attention here. So if I look at this screen here, you will note that there are total how many? Just let's come down here. Total 31 stocks is what they have accumulated during these 6 months. Let's start from the beginning and you will see that the top 5 stocks you see have got heavy weightage in their portfolio. Reliance Industries, Geo Finance, Aditya Birla Fashion, Polymedic Limited. None of these are recommendations, by the way, but what you note here is that during these last 6 months, they have accumulated that by smaller percentage, 6%, 1.91%, 0.45%, 3.03%. So again, this is point number one. Point number two is the highlighted one here. You see, for example, RBL Bank Limited, you will note here that from October to March, their exposure has gone up by almost 32%. Now, I'm not saying that you should go and buy RBL Limited. Please do not take that as a recommendation. But what you note here is that they have built conviction in this particular stock. Another example to look at is Ventive Hospitality Limited. I do not know much about this particular stock, but what you note here is that they picked up in the month of December. And actually, since December, they have been buying this gradually. Again, the point here is the gradual buying. They have taken this position from December to almost March by 91%. So huge buying in Ventive Hospitality Limited. I know nothing about this company, but what it tells me is now to go and explore this particular company. Let's move to the next one. Aster DM Healthcare Limited. They had exposure in the month of October. Gradual buying is what we see here. Very, very gradual buying in the month of November and December, and then it remained constant in the month of March. Total quantity has gone up from October is 26%. Next one is Anand Rathi Wealth Limited here. Again, they had this stock in the month of October. It has gone up in the month of March. So it remained constant until the month of February. And then in the month of March, it has gone up by almost 50% in terms of the quantity of the stocks. Again, what you could do here is go and study Anand Rathi Wealth Limited. Also, Wellspun Enterprise Limited, they did not have in the October. They seem to have picked up these two stocks in the month of November. And you see how they've gradually gone about building their positions more and more. In fact, Wellspun Enterprise Limited, they have gone from 84,000 number of stocks to, 67 lakh 12,000 stocks, which is almost 8,000% up in this particular company. And also we noted that in the month of March, they picked up Wellspun India Limited. So they seem to have gone very heavy on Wellspun as a group. They have done a lot of buying in this group. Again, not saying that you go and buy that, but this raises a question that should we also go and study about Wellspun. Moving on, Afcons Infrastructure Limited. They have done huge buying in this particular stock as well, almost up by 82% from the October levels. Moving on, One Source Specialty Pharma Limited. I know nothing about this company as well. Maybe one that I would like to go and study. They seem to have picked it up in the month of December and have remained constant from there on. NCC Limited, another stock that they had in the month of October, remained constant up until December, and then they started to buy in the month of January, February, and constantly in the month of March, up by almost 78% from October level. Next one, Bata India Limited. They have done some buying in the month of February and March, gone up by almost 35% from October quantities. And next one is ONGC. They picked up in the month of November, and after that it has remained constant. Last one that I want to pick up is Gujarat State Fertilizer and Chemical Limited. It was there in the month of October, but from that time onwards they have done some buying in the month of November, then some buying in the month of January, and after that it had remained constant, but overall numbers have gone up by 51%. So the point here is that some of these stocks is what you can potentially go and explore, do some further research, have a look at how they sit across your portfolio, and that might be huge learning for yourself. So in this video, we have completely broken down Quant Mutual Fund's portfolio in the last 6 months, and definitely a lot of new names I have picked up for myself that I would like to go and learn about these companies. And I'm sure you would have also got good learning from this video. And if you did, please like this video. With that, I'll see you in my next video. Until then, keep rocking.